Morning. Um, so this new video, I'm gonna show you the recap on the Euro USD that I was looking for longs since yesterday, which is the Tokyo session. I'm in the Eastern time zone, so everything saying is based on the New York time zone, which is the Eastern time zone. Um, for the Euro USD, we have a bearish outlook on the weekly. So far, I'm still looking for this low to be taken out, but I'm not going to go into so higher time frame because what we are doing here is just based on intraday, a session or two, whichever kind of structure that is given. So for now, I'm going to focus on this range here because this was the high and the low form based on last week, Wednesday to Thursday. And on the Friday itself, we had a bigger structure based on the 4 hour. So it gave me a narrative that this might form a pullback to the premium or even to take out the premium high. So after all this 4 hour break of structure happened, we see the price came back down to take out this low here. But in my opinion, this is not the strong low. You can typically use this low here, which still holding, or you can use this low here on a higher time frame because this was the low that caused the high here. So immediately after the rate, it forms another higher high. So what we can see here is actually it's not only forming a higher high, it forms a higher low as well. So this becomes the internal strong low. I've known this strategy been for like a couple of months, but I haven't really used this much since until last week. Started to actually realize that this is a very strong tool by just marking out the higher low, higher high, lower low, lower high. This will give you a very visible range that you want to trade. If you are trading the pro trend, even though it's just the internal structure, it's still very useful because it will not allow you to short when the internal structure is bullish or long it when the internal structure is bearish. So trust me, this is very useful. So now until the Friday itself, before the market opened yesterday, everything is based on this range here, right? I'm gonna mark this out here, which is the if this helps you to identify even easier, right? So I was personally looking for a long during the Tokyo session yesterday because what happened was market opened at this candle here. It forms a very large push to the upside with a hourly displacement. So this gives me a even stronger confluence that this higher low is holding and it forms another bigger structure. So price will likelihood take out this high, which is our low hanging fruit. So I was actually looking for entry at this fair value gap 50%. I didn't really use the OTE for this one itself, so it gives me about 4 hour. But unfortunately, prices keep driving to the high, never come back at all for re-entry. So right after 10 o'clock at night, I off everything and that's it for the session because I realized that after weeks and months of testing, any entry that is given after 10 o'clock at night Eastern time, usually it will be taken out, it will be liquidated. So as far as I'm concerned, I will not do any execution after that timing again. So, um, London Q zone give us this range, small little range here until 8 o'clock. I'm not saying all this just based on the after event. I can show you what's happening here right at 8:11. As you can see from my cursor here, I'm clearly showing that this is going to be long. So coming back to the top-down analysis, we see a M5 big structure. You can use this as an entry. Doesn't matter. My personal strategy is to use the entry point right at the mitigation level, which is this little wick here. So whatever I'm going to enter is based on any price below that mitigation level. So it will liquidate the late longs. You can see it on M1 entry. So whoever is longing based on the stop loss here will be stop out and price run, right? So going back to M5, price weak, and it's another double confirmation that I'm looking for long. Um, Price holding. So this is a new low, internal new low that caused a new high here, right? So at this point of time, it gives us um, M15 break to the upside. It in actual we had a multiple break, so it forms a higher high. So at this point of time, we just need to confirm whether we have a higher low form after the bigger fracture. So after the 9:30 market open, price liquidate those late longs, which is all these late longs. The price is holding, the strong low still holding, and rapidly go to the our drop liquidity. So this is very clear because we're trying to trade within the range that we have. I'm not trying to predict whether it will go higher. So holding any runner to the upside, you can do that. That's up to you. In my opinion, right now, price has caused new high, but on a hourly range, I don't see this as a new low because this is just internal within this internal range. I would see this as the new low because this was the high that forms the new this was the new low that forms the new high. So price can still come back down, take out all this low here, but if we don't get a displacement to the downside, we get a rate followed by a lower time frame confirmation, we can look for a long again and drop liquidity is this range high. That's what I've been testing for the past few weeks, and I feel that this is the best way to trade because there's no point predicting price is going to go higher or lower, whichever way you want to think. It's just predicting and betting. It's just like buying lottery. So yeah, a very quick one just to recap what I have looked at for the USD. And if you have any questions, please feel free to drop in the comment. And don't forget to give a like and subscribe to my channel. Thank you.